As a trader, it can often be extremely difficult to separate the signal from the noise, especially when we have an endless news cycle with Fed governors Jerome Powell, inflation news seemingly dropping every single day, and people changing their bias on the drop of a dime. So, what's the best way to eliminate all of that noise and look for signal? Well, if you ask me, and ask, I'm sure, today's guest, and most of the guests that we have on Trader Tuesday, it's to just look at the chart, right? All the news is baked into the chart. Everything you need to know is right there, and you can eliminate all the noise and all of the news and find your bias and your trades that way. Well, I have a master of that joining me today. I have Dan from Chart Guys, one of my most popular guests ever. It's been way too long, so I'm really excited to have him back. We're going to talk about stock market, crypto, Bitcoin, Ethereum, altcoins. Take a look at the charts and get on a little hunt here for some trade ideas. You guys don't want to miss this. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and click your pen right down on that like button. Guys, as you know by now, we are sponsored by Prime XBT 4 days a week. So if you are actually trading or looking for actionable advice, that is a great place to do it, unless, of course, you are from America, the land of the free, home of the brave, where they don't actually allow us to trade or do anything. And that's only getting worse. But on Tuesdays, we don't have to talk about the shit show that is regulation and American law and the scam that is accredited investor rules. What we get to do on Tuesday is just look at a whole bunch of charts, talk to brilliant traders, and look for alpha. That's why this is always one of my favorite days of the week. And as I maybe mentioned before, I have one of my favorite guests today on one of my favorite days, and that is Dan from Chart Guys. What's up, man? How are you?
I'm great. Thanks for having me.
A pleasure, and thank you for not trading the Daily Open today and coming to join us instead, because I know that you probably would be if you weren't on here.
Yeah, last day of the month. Been a good month, so I'm okay, calling it here.
Yeah, never a bad time to just close out the month with a smile and a profit and not push too hard, which I can remember from my early days of becoming a professional trader, thinking that I had to be in the market literally 24/7 every second of the day because I had to make my daily paycheck. And that went poorly. I'm going to be honest. My first 6 months, as when I quit everything and was like, I'm just going to trade, I pushed way too hard. And it was a very important lesson learned. And I know that that's something that you sort of take to heart, the ability to be on the sideline and to just wait and be patient.
Yeah, if you're forcing trades, you're obviously going to be putting yourself in a lot of unfavorable positions. And the key to a full-time trader is knowing when to put the pedal to the metal and go aggressive and put in those long hours, but also when to recognize, this market environment does not suit my edge, or I don't have a ton of clarity. So trade less, take a step back. And again, we're looking long-term over years or decades. And so if I take a few days off or even a couple weeks off, big picture, it shouldn't matter a whole lot on the whole.
Yeah, trade less, make more was one of the sort of fundamental rules that I came to learn very quickly when I tried to become a professional. Zoom out, look at larger time frames, take bigger, larger trades with higher conviction. It was really just anyone who's out there. I know you guys have probably been through this same sort of cycle. Did you have any similar experience when you were first really getting after it?
Oh, definitely. It's, every day, like you said, I want to hit my goal every single day. And then you'll have a red day and it's halfway through the trading day and it's, well, I got to make that back. I got to turn this into a green day. And many times if you just accept, okay, I don't have it today. And for me that, I can very clearly tell when I have the flow and very clear when I don't. And recognizing I don't have it today, I'm going to stop early. I'm not going to magnify my loss, and I'll try with a fresh, clean slate again tomorrow.
Listen, we're going to look at charts in a minute, but I happen to be looking at the comments, and I see Tom Dunleavy here, who's the guest tomorrow, who is the head of research at Masari. I got to bring him on. He's going to be the guest tomorrow. What are Dan's favorite indicators that he doesn't see many people talk about? Just going to hit you with the questions.
So honestly, the indicators that I like the most are the more common ones. I love using RSI. I love volume. I use EMA 12, which actually came from back when I first started trading crypto, Coinbase had it, you could only look at that on its chart. It's like, wow, this keeps coming into play. And then I brought it over to trading stocks, and I use it for targeting a whole bunch. But RSI, I love what I call a back burner trade, which is just when you're in a very strong trending market, the RSI gives great signals. When you're not in a trending market, when you're a sideways choppy market, the RSI can be useless. So again, it's knowing when to use it aggressively and when to lay off of it, because it's a lot less helpful.
It's my favorite indicator as well. I primarily use it for extreme overbought and extreme oversold scenarios, looking for divergences with price as a signal that potentially we can sort of, I don't recommend it, but, catch that knife on the top or the bottom. But yeah, and it does obviously give you the trend. But RSI has been, after I think going through every single indicator strategy known to man over 10 years, I came right back to the most simple one.
Yeah, that's for me as well. It's always been that way. And like you, I love playing, extreme oversold bounces. And when you have those RSIs lining up on every time frame in extremes, that's when you can get a little bit higher conviction.
Yeah, I love when they build. I mean, Bitcoin was oversold on the weekly chart for the third time only in history at the bottom here on the FTX drop. I mean, that's about as good of a signal as you get actually over the summer. And then it gave a bullish divergence on the FTX drop. But let's talk less in theory here and start actually digging in. Can you give me your broad strokes on where you stand with, I guess we could just talk about all markets in general, and then of course zoom into what that means for Bitcoin and crypto at the moment. And just let me know. I'm happy to share your screen.
Sure. So bigger picture, if you ask me what's the most likely scenario, let's go long-term time frame, S&P 500. Are we more likely to head down to new fear lows or back up to all-time highs? I am open to both scenarios, absolutely. And that's one thing that I value in myself as a trader, is a lack of an attachment to a bias. You definitely want to put yourself, you want to have bias in certain scenarios, but big picture on a daily basis, I'm open to green and I'm open to red. And I feel like if I had a long-term bias, like, we're heading back down to fear lows, then the start to the year where we had a whole bunch of green weeks in a row, that would be very frustrating. And I'd be taking that long-term bear bias on a daily basis. And that would be the wrong way to do it, in my opinion. So I have most recently, just yesterday, shifted my swing trade exposure back to flat from being bearish over the past few days. We started the year with the S&P 500 setting a higher low every single week, 7 weeks in a row. And if you look back historically, 7, 8, 9 weeks, that's your extreme. Consolidation is coming. So we were just sitting there patiently waiting for a little bit of weakness. We've gotten that over the past couple of weeks. And I am looking for a weekly higher low to be the most likely scenario. We don't have much indication that that's shaping up right now, but I am keeping that in the back of my mind as the most likely scenario over the next couple of weeks, scouting for that to happen.
Yeah, that makes perfect sense. And outside of just the S&P chart, when you're trying to figure out what's happening to the market, is there anything else that you're looking at? Do you check the dollar, or are you checking any other asset classes to give you an idea of what's likely? I mean, I think at this point, everybody kind of keeps one eye on the DXY at all times to figure out what's likely to happen, because we know everything trades so heavily inverse to what happens with DXY.
Definitely. I watched DXY. I'm watching it on the longer term time frame because we had obviously the big time breakout, and then we had a big time pullback. And usually for me, that means scout an equilibrium. And an equilibrium, I mean just a tightening range. So I'm watching for a monthly bounce in the dollar. It's close to shaping up. We're about to close the monthly candle fairly close to the high here. And so if we start March and break the high of February, our monthly higher low will be set. We'll be looking for a bounce. And then that's going to help me determine the most likely scenario for the broader market as a whole, because we're either going to confirm a monthly downtrend on the dollar and be in a downtrend on every single time frame at that point, or the bulls are going to see, I should say the dollar bulls are going to see some significant follow through, and that will keep the broader market bear narrative on the table. So I watch retracement size to help determine probabilities, and the retracement size that the dollar is going to see on this bounce is going to be very informative for me to help me determine that longer term bias, which I don't really have one at this point in time.
Yeah, I think it's a pretty mixed bag. I'm looking at that monthly, which I haven't been checking, and that's clearly a massive bullish engulfing candle right now over the last month. I mean, yeah, of course, you need the next candle to confirm green to even care about the bullish engulfing. So when you're looking at a monthly time frame, people have to realize just because you get a big green candle, you have to wait literally 30, 31 more days for confirmation. But that is a pretty good reversal signal right there. What EMA or MA is that crossing? Is that the 12 again?
Yeah, I got the 12 in the red and the 26 in the blue.
20. So that's the 26 and it's bouncing just above right there.
Yeah. Another thing I'm watching is the NASDAQ weekly chart. We're back testing that EMA 12 here. And if you look at Bitcoin, we had a very similar back test. Let me clean that up. But we had the initial breakout, the back test of the weekly EMA supports. And then we got that leg up. Granted, that leg up rejected hard off that 25.2 resistance everyone was watching. But NASDAQ bulls are looking at that and saying, well, I hope we do the same thing in terms of holding the EMA back test into continuation. So it's going to be pretty important to me whether or not the NASDAQ bulls in the next week or two are able to hold that level and set that weekly higher low.
Yeah, I'm just looking at my chart here, the DXY chart. I was looking for 103.8 sort of to hold as resistance there. That was the high from all the way back in 17. I mean, you can see we hadn't been there since 2002, right? And that was sort of the major breakout for me. It didn't hold, but we do have the 50 MA right here on the weekly, which is acting as pretty strong resistance, which is that hadn't even been tested basically since it flipped in June of 21, right? So I just think I don't really care which MA. I just think most people are watching the 50 and 200, right? Because you see the narratives about golden and bear crosses. And this is a huge question mark, but it does look like it could be putting in a head and shoulders. But of course, that would take a break below 100 to even confirm. But that's where I'm saying the mixed signals. I think you could make a case on even large time frames for the dollar to really go either way.
Absolutely. And one thing I noticed when I'm on social media, one way that I use it is, sentiment. And I'd say over the last, 4 or 5 months, it's just been such an even split on people that are convinced we're going back to all-time highs and people that are convinced that it's about to all fall apart. And that means that, half of the market is going to be wrong. And, expecting that we'll see a good amount of volatility once we get the more clear picture as to which way we are going, but also open to the possibility that, we tighten up for a number of months before we end up getting a lot more clarity on the longer term timeframes.
Honestly, that would be my bias, right? Just a really confusing, choppy half a year at least. I mean, I literally have no idea what would happen. When I do zoom out from the charts and listen to the nonsense, it's sort of anecdotally you talk about what people think will happen with the market. It sounds the same when people are talking about recession, inflation, these sort of sporadic predictions, 100% chance of inflation. Then one day, like a week later, it's like 70% chance of inflation. Then it's 175 chance of inflation. Nobody knows shit, honestly, is the bottom line. But when there's that much confusion, I think, and that much flip-flopping, what you get is people just getting destroyed by the chop, in my experience.
Absolutely. And again, the headlines, there are so many of them. And it's important, as a day trader for me, I got to be aware, all right, there's a Fed speaker today at 2:30 p.m. I just need to know. I don't listen to them. I don't look at what they say, but I just know 2:30 p.m., 5-minute time frame is likely going to see some volume spikes and some volatility pick up a bit. And so I just don't want to get caught by surprise on that. But yeah, I mean, so many of these fundamental things that we get out, I don't even, read the headline. I just need to be aware that the market is going to be reacting to them. And I get all my information from the price levels, as you mentioned in your intro.
Yeah. And I think what's interesting is that almost every time now we've seen an inflation print or a Powell speech, there's really no signal anyways, because you just see massive volatility up, massive volatility down, back to the same price, and everybody who has high leverage liquidated on both sides.
Absolutely.
Right?
That's definitely a pattern recently.
And it's been pretty ugly. Micro Hayes over here says it will be exactly what everyone does not expect. I agree with that, but right now I don't think there's any consensus on what everybody expects, which is the problem. If right now I felt like everyone was sure it was going to be a Great Depression, I would feel like the bottom was in. I just think there's plenty of people still who think, myself maybe included, I don't know, that the bottom is in and, things could go up. And so if you think we're going to go into a raging bull market, you basically want to have everyone thinking that everything's going down to zero.
Exactly. Yeah. You want that short buying pressure. The chart I've got up right now is SPY on the 4-month time frame. So very long term. Every candle, 4 months of trading, 3 candles is a year. And again, you look at this EMA 12 and we just keep holding it on all these pullbacks. And so it's such a drastic change of what we're going to see here. We're either going to confirm this downtrend for the first time in over a decade, and that's going to be a huge shift in the long term, or it's business as usual. We're going to hold the EMA 12 and head back up towards that all-time high. And so this is the scenario we talked about where, maybe we go sideways for a good part of this year. If 3 candles is an entire year, maybe we bounce a little more, set a lower high, pull back a little bit. Next thing you know, we're talking 2024. So definitely open to that possibility as well.
Yeah, I mean, I like to zoom in. I SPY is what I've sort of actively traded and invested in over the years when trying to sort of get that broad exposure. So it's a chart I look at often. I think everybody on planet Earth with a chart was looking at this descending line on either SPX or QQQ or SPY or ES, any of them. And we did get the breakout and retest. And it's still, like you said, even with the 12, it's still hugging the 50 MA here as well, holding above the 200. I'm not a golden cross person, but there was a golden cross for those who don't view it as a lagging nonsensical indicator. And a retest of this line. I mean, to me, at least in the short term, it looks like what you just drew, which is that maybe we continue to float up a bit for a while before we get a real decision.
Yeah, I'm absolutely open to that. And if we set the weekly high or low that we're looking for, if the NASDAQ holds the EMA weekly back test, then we would be bouncing off that downtrend line back test that you have up there. So open to that as well. Again, I'm flat
also
at the
looks
moment.
Like a big ass inverse head and shoulders.
Yeah. Flat at the moment, just waiting for a little bit more short-term clarity in terms of, are we setting the weekly high or low, or are we not? And over the next week, I think we're going to get a good answer to that question.
Yeah, I'm just happen to be looking at it right now. I mean, it's basically the same trend line, but if you viewed these two as sort of shoulders, you have a pretty clear inverse head and shoulders breakout and testing that 50 MA too. So there's a lot, yet again, mixed signals. So what are you looking at on Bitcoin then? And are you actively trading it? I mean, I know you're not right now.
Yeah. So Bitcoin in the short term here, we actually are just trying to break this. This was a little 2-hour equilibrium. So as far as today's action, it was a little tightening range that's trying to break bull here. So that just then has me zoom out 4-hour time frame. I'm looking up at 23.9 thousand, the high of yesterday, as a key resistance level. And I have been trading crypto through Riot and MARA and the stocks. And as a day trader, I'm in and out so many times. I've saved 5 figures in fees, where if I was doing the same kind of trading in crypto, I'd be racking up those fees. So I chose to forego crypto and stick in my stock account. But just recently, I did grab a little bit of Bitcoin at 23,000 this past weekend, and I sold enough now where my stop is under the recent low of 22.7, and risk-free essentially. I don't have high conviction here. If we drop down and it breaks that level, back to cash, back to patient. But giving myself the possibility, I've been watching the 2-day time frame on a lot of altcoins. There's a lot of altcoins that have tightening 2-day ranges. So I thought, all right, well, there's a scenario I see here where Bitcoin could be forming a 2-day high or low. There was an hourly falling wedge setup, and I like falling wedges. So I just saw a short-term opportunity that I had some confidence in to give myself some exposure. But again, just getting risk-free quickly, selling partial quickly because I don't have high conviction.
Can you talk a little bit more about that as a strategy? I mean, why you sort of take your money and run and allow you to just roll with the house's money to some degree?
Yeah, I love not caring. You set the trade game plan in advance. So, okay, this is where I'm going to enter. My stop's going to be here. I'm risking this much. And this is my potential target. And I'll always have, for this trade example, my target was the 4-hour EMA 12. If we get a little bit of a bounce, I'll take a little bit off there in case we reject from that resistance level. We ended up getting over it. But breaking up positions, again, just the psychological ease of stress where I just set my stop and I don't have to worry about anything. I don't have to check the charts constantly throughout the day. I'm either going to stop out or I'm going to have a nice solid win. And the faster that I put myself, again, when it's not high conviction, if I've got high conviction, I want a larger position size to play out longer. But if there's a lack of conviction, aside from a short-term move, sell a little bit, lower your cost basis, set a stop near that cost basis. And again, it's the kind of scenario where I don't want to be taking loss after loss after loss trying trades. But if I go break even, I'll keep trying. And that, keeps me able to constantly be potentially positioning myself in favorable risk reward scenarios.
Black Diamond off the grid here wants to know, is Dan trading spot or leverage?
I have never traded leverage in crypto. And yeah, it's just, I didn't need it back in 2017. I was fortunate enough to have the 1,000% gains to level up my account. And I definitely, trade on margin in my stock account, generally not with more cash than I have. But yeah, I don't love leverage. The people that should be using leverage are the experienced traders, but so many new traders jump into leverage to try and, get rich quick. And it just ends so poorly for so
Get
many.
poor
So
quick.
yeah,
It's a good get poor quick strategy. I'm going to turn my 1,000 into 10,000. No, you're just going to turn it into zero really fast.
yeah, I always say, like, if you got 3 years of consistency, proving yourself that you got discipline and that you can honor your stops, then absolutely, give leverage a shot. But I've seen so many good traders that have the technical analysis down, and I watch them progress over a year or two. And then one day, all it takes is one day, and all that work is gone and they are blown up. And it's such a shame that that's a possibility. We never want to put ourselves in a situation where that's possible.
Being a good analyst and being a good trader are literally completely separate and almost unrelated skills in my experience. I have friends who are, Wall Street hedge fund analysts, have been doing it literally forever, make millions of dollars. And if you ask them to take a single trade, they would completely spaz, move their stops, panic, not sleep, and they just can't execute. And it's fine. There's nothing wrong with that, but it's literally a different skill set. You can almost not know how to do analysis, but if you know how to just position size and throw darts, you can make money almost as a trader with poor analysis.
It's definitely the harder part of the game, the psychological, the emotional aspect. And that's why I keep saying, trading is a lifestyle. You've got to shape your life around this. And, you have to be practicing all these character traits that are required to be a good trader 24/7, your entire life. You can't have emotional reactions in traffic. You can't, lose control of yourself around an open bar. There's so many layers of trading and, discipline that are required to do this long-term successfully.
I like to trade on my phone during an open bar while in traffic, personally, just to keep life exciting. And I loved what you said earlier about how you can just set your stop and go about your life, and either you'll stop out or you'll make money. Because I think most people set their stop and still watch the 5-minute chart, and then probably move it at the last second.
Absolutely. Yeah, you can overdo it. And, that's something that took a long time. Now, being 12 years into trading, definitely my first few years, I was doing that. And even in crypto 2017, glued to the screen just because I knew that's going to be a short-lived opportunity. But once you're talking decades, you realize, okay, this has to balance out. I have to get off the screen a lot more. I have to let these trades play out, thinking, like you said, zooming out, thinking bigger picture, waiting for higher conviction trades, even if there's fewer of them. That's the longevity aspect of this game.
This is the Bitcoin monthly. So what do you, if you can see it, you have it, I'm sure as well. What do you make of this monthly candle? We've got a extremely indecisive doji that wicked a few dollars above the most key resistance on the chart for me. And you can see that if you go in on the weekly, you can see why that resistance is so important, because as I've said, 25,212, at least on Bitstamp, it's within $50 on any exchange. That's the higher high that breaks the series of lower highs and lower lows that we've had since 69K. That's also the 50 and 200 MA right there on the weekly. And now we have tweezer tops, both testing it with multiple daily attacks. So, I mean, isn't 25,212? I guess it's hindsight. I've been screaming about it as the key resistance, but I mean, that was a pretty gratuitous short there.
Yeah, and you see, the good traders, at least the good traders I know and follow on social media, it's the line in the sand where if we're under that level, you can keep a bear conviction, but once you get over it, you got to flip your mindset a bit and be more open to the bull side. You can see here, I'm on the monthly, and guess where we are rejecting from? Monthly EMA 12 back test. So that's, aligning with all the other inflection point of all the other things that you just pointed out as well. One thing to note is, it's indecisive here, absolutely, but it is better positioned than the broader market. You look at SPY's monthly candle, we're going to be closing right near the low of it. And so It's going to be a lot easier for the broader market bears to break the low of February. That'll happen probably before Bitcoin breaks the low of its February candle. So perhaps a little bit of an early recognition in SPY and QQQ if that were to happen.
It's interesting. Bloomberg reported last week that correlation between Bitcoin and stocks is actually at basically it was like a 10-month low. May of 21, they were at 0.8. Now they're down to 0.3, which is starting to be almost not correlated. And that shows in the chart, right? I mean, even though they're sort of following a general path, there is relative strength in Bitcoin and has been for quite a while.
Yeah, from once that bottom was found, BTC divided by the S&P 500, we can see on the weekly time frame here that we've been stronger than the broader market since we bottomed, and seeing that weekly uptrend. And it's just a question of how long can the bulls maintain that. But when we were at that high there, it was the strongest relative strength that Bitcoin has had versus the S&P 500 in the last 8 months. So it definitely was notable.
I'm assuming that huge red candle right around there in November. Yeah, I can see it now because just trying to look is FTX, right? I mean, that's when we decorrelated heavily. It's the good news we just came right back in 2 months.
Yeah, short-lived capitulation move there.
But interestingly, I mean, even on that chart with SPX sort of as a denominator and on the dollar chart and all of that, that whole area of the highs before FTX are holding as support. I mean, that's sort of the level of support now. If you look at it, I mean, on my chart, that was, I guess I probably have it right here. Yeah. I mean, looking at that same weekly chart, I mean, this is where we were before FTX, right? 21,453. This is just chop. Like, that's why I said, I think we're in no man's land. I have no real bias here. Anything between 25 and like 21.5 is just confusion to me.
And that's perfectly fine to have no bias. As influencers, people will be on the comments, like, you thinking you have to have conviction in one direction or the other. Are we going up to all-time highs, or are we heading back down to the fear lows? And it's just, I don't know. And like, I'm going to admit that I don't know, because if I were going to kid myself and pretend that I have high conviction, I'm going to lose money. So that's part of the ego aspect of trading, where as a trader, you have to take a step back and say, do I have high conviction here? And the answer of no is A-okay. There are some days where I'm day trading and I'll see, a setup on the daily time frame, and I'll say, I have no idea if we're heading up to the high of the day or the low of the day from here. So that means I'm not going to take a trade. I'm going to step back and wait for more information to help inform my opinion and give me a bit of a bias, because I don't have a bias at that point in time.
Yeah. I mean, for me, just looking at it, a close above 25.12, even maybe on the daily, I think would give me pretty high conviction that we're going to the 28 sort of 30-ish range. That this area right up here, 28 to 30-ish, maybe topping around 32. But if we erased this entire massive January candle here, all of this January price action, and especially the one from 2 weeks ago below that 21,473, I think we'd head back down to, the 18s or 19s or something.
Yeah, there's a lot of swing trading bulls that are using that weekly high or low level as a stop for sure.
Yeah, I think it makes a lot of sense. Okay, so interestingly, you trade Riot and Mara in lieu of trading Bitcoin. You don't use leverage, but those effectively trade like leverage Bitcoin plays.
Oh, they definitely do. There is plenty of volatility. And as a day trader, I'm seeking out volatility, and I view it as, the range of the day, that's my pie. And I want a piece of the pie. I want to take my own little piece. So if you got a 2% range on the day, my pie is this big. If you got a 10% range on the day, my pie is this big. So it's a lot easier for me to get my piece of the pie on any given day. And yeah, since the start of the new year, the volatility in these names in both directions has just been a gift. From the low, we see a move of 94%, then a 2-day drop of 16%, another move up to 41%, move down of 33%, bounce of 40%. It's just all over the place. And again, with no fees, when I can be, throwing around 6-figure market orders and have good liquidity and be getting filled and not racking up 5 figures of fees, that's just, that's a very enticing aspect of these instruments for me to be trading them.
Yeah, and you get the leverage without the counterparty risks to some degree. And I think the other way to trade the volatility, obviously, is to go past Bitcoin and start looking at altcoins, because, kind of the same thing. If Bitcoin is moving, 5%, you might be getting 10, 15%. I know before the stream you said you don't look at them too much, but there are a few you're potentially watching. So what are you watching there in the altcoin market?
I've been keeping an eye on OP, and just because OP has had a significant move up, and honestly, any name that has proximity to all-time highs is a name that you want to pay a little bit of attention to, just because, we've seen over the years what happens when, blue sky breakout all-time highs and price discovery enter the picture on especially lower volume instruments. But at the moment in time on OP, we got a tightening 12-hour equilibrium that I'm watching. So it's at the higher low at 263, a lower high at 310. And so now the bulls are attempting to hold 263 and get a bounce going. And if that happens, we'll see a nice tightening range, probably right into the weekend. And that's going to dictate some short-term momentum here, depending on how that breaks. But, there's the opportunity on some of these like Mana was, the lead bear, just all these metaverse names, just the weakest of the weak. And once that bottom was set, very significant amount of short covering led to, big gains. So I'm very much into altcoins for short periods of time in terms of I'm interested in it while it's got the volatility and while it's in the spotlight of being a lead bull. And then once it fades, moving on and finding the next name that gets that spotlight attention.
How do you generally scan the market to find those?
I love the BTC pairings. So just like we were looking at Bitcoin divided by the S&P 500 to see relative strength and weakness, Mana divided by BTC shows us who's stronger, who's weaker. And we could see, again, it was just all bear. So Mana is relatively weaker than Bitcoin for months and months and months. And on the daily time frame, hindsight's obviously easier, but the bull volume just saw this spike. And that was the most bull volume on a bounce 3 days in a row that we had seen in quite some time. And then from there, we got that big second move up. And that's when, obviously the significant shift was very clearly underway. We had shorts covering. And that's another thing, like right now, XRP, I don't care at all about the fundamentals of XRP, but it's been a relative bear for a very prolonged amount of time, for months and months. So it's just something I keep an eye on. Are we going to get, volume spike on the daily time frame to see this significant relative weakness start to shift towards relative strength? And when you're in a high conviction bull market, these are some of the best trades to be looking for because you just get that rotation. People are throwing profit all over the place. We're going to run these coins, then we're going to run these coins. And so you can see on the BTC pairings which names are starting to gain favor and start to outperform Bitcoin. And then obviously, like you said, it's almost like added leverage where if Bitcoin's going to go up 2%, these coins are going to go up 8%. And so I always watch these ratios. And that was a big level up in my game in maybe 2018 after the initial crypto wave of euphoria, where I was able to hone in because, 2017, you look at Bitcoin, Ethereum, Litecoin. That's all you needed. And that's all I was trading back then. But now you get all these other coins and all this other significant opportunity. And so I needed a new strategy. How do I scan the market? And it's through these BTC pairings.
And interesting, when I came in late 2016, 2017, I only traded BTC pairings. And so because, you bought your Bitcoin on Coinbase and then there was no way, at least for me, to buy Ethereum and Ripple and all these things. You had to move it to Bittrex. And then, of course, there was the meme that you were, up in USD, down in Bitcoin because you had no idea that you were trying to stack more Bitcoin. The early days were a lot of fun. But I held on to actively trading the Bitcoin pairs probably a year past everyone else. And then they just sort of disappeared. Because there really was no tether back then and there was no USD liquidity. You couldn't even go on Coinbase. Like you said, you could trade Ethereum, maybe Litecoin and Bitcoin. So any other altcoin you were trying to buy or trade, you had to convert to Bitcoin and go to Bittrex and then later Binance before they kicked out the Americans, of course, as is a thing. I actually I'm looking, you just showed that XRP chart. I mean, this is at as big a support as you can basically find here.
Yeah, it's the kind of thing where, every day or two, I just check that chart. Is something standing out? No, not yet. But, it's definitely, it's the most I've watched XRP this past week than I have in the past, 4 months. So
what would give you the trigger there? Like, what would you need to see to actually say, hey, this is, because it looks bottomy, but we all know that could just be bearish consolidation before a drop, we get a drop down to this area right here, but,
we're struggling at the daily EMA 12 the last week or so. I want to see a break of this 1660 level, and I want to see a couple days of increasing bull volume. Because you see, we get these little 1 day spikes, but we don't get the 3 green days in a row with some solid follow through. That would be my first indication that a shift is brewing.
Okay, so if you like it on the Bitcoin pair, I'm assuming you're still trading it back on the USD or USDT pair. So I just walking people through the thought process. You see something you like on the Bitcoin pair, then how do you sort of flip and use that information to find an entry or an exit on the Tether or USD pair?
Yep. So I got the Tether pair up here and it's saying, okay, I'm seeing the signals that I like, and then going to the USD or USDT pairing and finding a recent support level to be going off of. So if, I don't have the signal right now, but if I did, I would probably, we got a support level 369. I'd give the wiggle room. I'd be making a trade based off of 3612. I'd take a position size where, I do the math in advance. I know worst case scenario, if that level breaks, how much would I lose? How much am I willing to risk on the trade? That's going to determine the size of the position that I take. And then we would need to see the constructive bullish action on both pairings. And what I call is the spotlight is when you're directly correlated with both pairings, where you'll have, an hourly, a 5-minute uptrend on the US dollar pairing, and the BTC pairing is doing the exact same thing.
Yeah, I love that. That's great alpha for anyone out there, you guys listening. I mean, going and checking the Bitcoin pairs, that's the old school way of doing it, but that is going to show you what's likely to start to show some relative strength. I know it's hard when there's thousands of these coins, but I've always sort of professed just focus on a few that you like and get to know those charts and trade them. I know it's hard when you see all of a sudden Chinese coin narrative or AI narrative, but those things don't last.
Yeah, very short-lived. And, we have the AI stock narrative. I was trading the stock AI, great volatility. And again, this is pumping the gas and pumping the brakes. Here's your gas, huge moves in both directions, 35% pullback. And now we're just tightening up. So now is where you're pumping the brakes because, again, the pie is way smaller here than it was back here. And so if I want to get my piece of the pie, it's a lot harder these past few days than it was the past few weeks.
So we're going to basically, you're basically just sitting on the sidelines for a while right now and seeing what happens, letting the month close out, as you said, and maybe tackle it again in a couple of days.
One of my least favorite things about trading is I'll see a setup that I like, and I like AI tightening nicely. This normally I would say, we know a volume and volatility spike is going to come when this range breaks, but we got earnings, I think, tomorrow maybe? So now that we're heading into earning or coming out of earnings season, but definitely have to always be paying attention to earnings because so many times I'll see a setup that I like, and then earnings are the next day or in 2 days, and earnings are going to dictate that trade, and that's out the window because I'm not going to play the earnings and hope it goes in my favor. That's too much gambling for me. I like to have the probabilities in my favor a bit more than the coin flip of earnings.
I agree. So anything else you're looking at here? Any final words before I let you go and actually do some work on your own?
I've been keeping an eye on natural gas. I don't often trade it. And in the past, it's given me some trouble, but just the weekly stair step where every single week was a drop, we got really extreme. And the momentum has clearly shifted in the past few days. So what I'm watching for now is, can we confirm a daily uptrend? Once we top out and pull back, can we form the higher low and higher high to try and see this weekly bounce, get some follow through? And again, the volatility is wild in this name. We've already got a 30% plus bounce over the last 4 days. You've got leveraged ETFs. So there's BOIL, which is a 3 times leveraged ETF. Again, people that were too early on this bounce attempt got absolutely crushed. But since those lows, it's a quick 60% plus. I guess it's only a 2x. They took it down. They had 3x, but too much leverage. But yeah, just volatility. Again, I'm seeking out the volatility, whatever it is, whatever instrument, and then looking for setups on shorter term timeframes that I'm comfortable with, whether it's a fall-in wedge, looking for an hourly high or low, or whatever pattern we see shaping up.
Robert Vermouth says trading natural gas has to be like watching grass grow. I don't know. With a leverage ETF with that much volatility on the downside, yes, if you're zooming out, it's not. But if you're watching it on the 5-minute daily, on the 5-minute time frame, that would be pretty boring. But look at that move down. If you were short that with a leverage ETF, you've made it just absolutely lifetimes worth of money.
KOLD is the bear ticker. But just yesterday, again, we had a 30% daily bounce. So the back burner trade that I'm talking about, first 5-minute oversold conditions on the entire daily bounce. This was a trade I took yesterday where it's just, you see 5-minute oversold, it marks an hourly higher low. And that's the first, dip buying opportunity that bulls have had in the last 4 days after a 30% move. So that's when I have more conviction using that RSI.
Yeah, makes perfect sense. So listen, man, I'm gonna let you go. If there's any final thoughts, but definitely tell everybody where they can follow you, learn more from you, check out your work because you're obviously smarter than me, and we should direct them to your channel.
I appreciate that. We've got Chart Guys on YouTube, chartguys.com, on Twitter, Chart Guys, just a whole bunch of free information, more in-depth information for those that want to dive deeper. But we just hit our 20 millionth view on YouTube, and we put out 8,000 videos or something stupid. So come check it out. We definitely love to interact with you all.
Awesome, man. Well, thank you so much, everybody. As I mentioned before, I'll be back tomorrow with Tom Dunleavy, now formerly of Masari. We're going to talk markets. He's one of, if we want to flip from the technical side to the fundamental side, he's the guy I go to when I want to know what's really happening in the markets. Absolutely incredible insight, charts, thesis. So you guys definitely do not want to miss that tomorrow. Once again, thanks to Dan. Chart Guys, check out everything he just listed. Basically, Chart Guys everywhere is what I got. Just look up Chart Guys.
Sums it up.
And you'll find him. Dude, awesome, man. Thank you so much. Everybody else, I will see you tomorrow. Peace.
That's dope.